All right, everybody. Welcome back to another episode of the Crypto 101 podcast. I hope you're having a fantastic morning, noon, night, wherever you guys are in the world. You're certainly in the right place because we are joined today by an incredible man, a visionary, a pioneer in the space, Matt Hougan, who's the Chief Investment Officer of Bitwise. Matt, welcome to the show.
What an incredible introduction. I'm so excited to be here. Thanks for having me.
Absolutely. No, we're happy to have you. And dude, you're an incredible guy. You were a godfather of the ETF world. Now you're a godfather of asset management here in crypto. Let's catch the good citizens of Crypt Nation up on who you are briefly before we dive into some exciting things like the Bitcoin spot ETF, like some new initiatives that Bitwise is undertaking. But who are you?
Sure. Yeah, I love that. I've led a couple lives, as you suggest. So I'm the Chief Investment Officer of Bitwise Asset Management. Bitwise, of course, is a specialist crypto asset manager. We've been around since 2017. We run the world's largest crypto index fund and have done a lot in research and in spot Bitcoin ETFs that I'm sure we'll talk about. So I look after our investments and our index strategies there. And before I moved over to Bitwise, I had a whole career in the ETF space. So I was the CEO of ETF.com. I created the world's first ETF analytics system. I wrote the CFA Institute's Guide to ETFs.
Jeez.
And then wrote the CFA Institute's Guide to Crypto. So I've covered both of those spectrums. So yeah, ETFs and crypto, put them together. And that's what you're looking at, for better or worse.
And I'm hearing ETFs are eating up all the mutual funds now.
They are $7 trillion and going $1 trillion a year.
Oh my!
And mutual funds are a dead man walking. ETFs are the future.
So what exactly is an ETF and why is it such a big deal for Bitcoin and crypto? And we've been hearing this narrative for years. As soon as a spot Bitcoin ETF comes, it's to the moon. But A, is that true? And B, if so, why?
I think it's a journey to the moon. I think that's the destination, but it won't be overnight. So to back up, of course, an ETF is just a kind of mutual fund. A mutual fund is how most Americans invest in the stock market. Instead of buying just Tesla stock, you can buy a mutual fund that holds 100 or 500 stocks. Maybe it tracks an index, maybe it's actively managed. And those were created, about 100 plus years ago, this idea of a mutual fund. An ETF is an updated version of that. It's like a mutual fund, but it trades intraday, and it's a lot more efficient, a lot cheaper, and a lot more tax efficient. And that's why, as Bryce mentioned, it's taking over the world, right? There are no flows into mutual funds. There are only flows into ETFs. So you can think of, when you hear ETF, think how America invests in stocks and bonds and commodities. And that statement is why the Bitcoin ETF is so important. Because right now, retail investors, and more importantly, financial advisors, people who manage money for other people, and institutions can't access Bitcoin or crypto in the same way they access stocks and bonds, et cetera. It's like they have to run two tracks at the same time. So what a spot Bitcoin ETF would do is it would make it as easy for a financial professional to buy Bitcoin as it is to buy the S&P 500. And that, history suggests, would bring a lot of assets into the market. And when we talk about a lot of assets, we're talking about tens of billions of dollars consistently, year after year after year, forever. And that would
sounds
be
real nice
for the space, right? Yeah.
No, I mean, you paint an awesome backdrop for where we're at and where we're going. I think a lot of people get confused because they think, oh, well, why can't my financial advisor, buy Bitcoin for me or whatever? What is that gap where people say, hey, I've got, an extra $10,000 in my IRA or whatever. Why can't I go to my financial advisor and just put that in Bitcoin? Why is there not a product that tracks it, that just the everyday person can do? What is that gap?
Yeah. The short answer is, and this is a frustrating answer, but it's reality. The short answer is there are ways to do it. They're just really hard. So Bitwise's business exists to serve this financial advisor market. And we have maybe 2,000 financial advisors who use our products. But in order to use our products, they have to have separate contract agreements. They have to underwrite the risks. They have to understand the custody. They have to bill separately on their crypto stuff versus their non-crypto stuff in many cases. And that's just a lot of work. And so an advisor who might make 2 or 5% of a client's portfolio in crypto isn't going to jump through those hoops. It's also the case that people rely on an ETF as a signal that the market is relatively mature. And so there's some hesitancy to get into it. So advisors are doing it today, but they're only doing it in a fraction of the way. And I can give you a perfect example. Gold has been around for thousands of years. People have thought about investing in gold for thousands of years. But until there was a gold ETF, which was in 2003, it didn't appear in any financial advisor portfolios. It was just too hard to buy a gold bar or gold coins and store it safely. Yes, you could do it, but you weren't going to do it because it was too hard. A gold bullion ETF was approved, and over time, something like $80 billion flowed into it. It's just making it easy is a big differentiator for this advisor market.
With all the ETFs that have been filed recently in the past month, including some from the largest asset managers in the entire world, I think there's never been a more bullish sentiment that something's going to get passed. How does this affect Bitwise? You guys have filed an ETF as well, not commenting on whether yours will get accepted or not, but how does this affect Bitwise as a company now having so many new kids trying to enter the playground where you really had your run of the mill for the past decade?
Yeah, it's a great question and completely reasonable. The first thing is for Bitwise and for everyone that's listening to this podcast, it's just a great thing. You have the world's largest asset manager that manages almost $10 trillion in assets, putting its flag in the ground and saying Bitcoin is an asset that will matter in the future, that financial professionals will want exposure to it, that they're willing to stick their neck out just to open up that opportunity. That's maybe the largest, most important endorsement of Bitcoin in its history. So the whole pie is going to get a lot bigger. And at Bitwise, we're more concerned with growing that pie than with our specific slice of pie. But I do spend a lot of time thinking about my specific slice of pie too. And there, the reality is in the history of asset management, when you get niche asset classes, specialists tend to win more than their fair share. So sure, BlackRock is a giant institution, an incredible company, but Bitwise has more people working on crypto than BlackRock does. And people forget that specialization does matter. So we're confident that we'll get our share. We welcome all these other people to help grow the pie, and they can have their own little slivers as well. But we're gearing up, to fight in friendly competition with BlackRock and hopefully win.
Yeah. No. So what makes you and everybody who has an active Bitcoin spot ETF filing, what makes you guys, or you, I guess you could only speak for yourself. So what makes you think that this time is going to be different, right? Like we've had, I think 20 sort of ETFs that have been declined. And it's funny, I saw this like meme that was like BlackRock's got, 575 out of 576 approvals. They got 99.95. But the SEC is 20 for 20 on on declining ETFs. So the odds are in their favor. What do you think of all this craziness?
Yeah, it's like a heavyweight boxing match, right?
Yeah.
Two title fighters. This would be our third time at Bitwise filing for a spot Bitcoin ETF. So, third time's the charm.
There you go.
I think there are three big changes, and I would say they're BlackRock, BitO, and GBTC. So to take them in
BitO is the one of the spot ETFs or the
one of the futures
ETF.
Yeah, and I'll explain why that matters in one sec. So take those in this order. BlackRock is the big dog, and when they come into the market, you have to listen. And actually, as a big provider, they have a unique capability that a company like Bitwise does not have, which is that they can encourage their partners like exchanges or like authorized participants to do things that it's harder for a small company to encourage them to do.
Right.
So they've encouraged NASDAQ to stick its neck out and develop these surveillance sharing agreements with Coinbase because they carry a big stick and they have a lot of business there. And that opened up a new aperture that didn't exist before. And so BlackRock coming into the space is both important from a narrative perspective, but actually from a technical perspective too, because we're now talking about things that were hard to talk about before we had that big club in the marketplace. The second one is BitO, or the ProShares Bitcoin Futures ETF, which was approved almost 2 years ago. And the reason that matters is that it's traded exceptionally well. It's tracked the spot price of Bitcoin fairly well, and it's caused the Bitcoin futures market to grow substantially. And a big part about getting the SEC comfortable with the spot Bitcoin ETF is convincing them that that regulated futures market is of significant size and really important. And the fact that that market has expanded a lot, that there's over $1 billion in open interest, that there's tens of billions of dollars of trading volume, that helps as well. And then the last thing, of course, is GBTC, which is engaged in a lawsuit with the SEC and pushing them over whether their distinction between allowing a futures product but not a spot product is sensible. And that's adding pressure. This isn't 100% chance we're going to get approved. But when you combine those three things, the market getting better, BlackRock opening up new avenues, and GBTC pressuring the SEC, we thought, it was worth filing. And I think that's what you've seen from, I guess it's 8 of our peers have also filed and put their paperwork in.
That's awesome.
That was a beautiful summary. It makes me feel like we're in the sweeps right now for crypto, right? Plus, we just had the XRP thing fold up finally positively for the crypto industry broadly. We got the Coinbase versus SEC thing moving along. All these ETFs, Grayscale. But I want your point on BlackRock was, prescient, because even my dad, who's, he's a boomer, he's, not deep into crypto at all. And here I'm his son, right? Like, been doing this for 7 years, and he's, never wanted to buy Bitcoin. But over Father's Day, he was like, you know what, Bryce? This whole BlackRock ETF really is getting me off of zero. I think I could, put some of my retirement. I was like, BlackRock, this company that doesn't even care about you. I've been praying for you to buy Bitcoin for years. Now freaking Larry Fink could get you off the couch. But it is, like you said, they carry such a big stick, because he's like, well, they carried my entire retirement account. So it'd be very easy for me to just, I trust them already, and it's already there, right? And at the end of the day, I think this will bring, like you said, tens of billions of dollars off of zero and get it just, 1% of his portfolio and that kind of thing going. But, I like the recurring idea, because, people are always working. People are always contributing to their IRAs and their 401ks. But yeah, crazy.
I love that story.
So a couple of the reasons that ETFs in the past were declined, the SEC cited a lot of market manipulation in crypto. And to be fair, that was true a couple of years ago. I think, Bitcoin was still maybe 60% wash trading from offshore exchanges at that time. And there was no real good banking grade custody provider out there. There was some good cold storage solutions. There was some institutional grade stuff, but it was really, really difficult to work with. And those were a couple of the reasons that were cited for the declines, not because of Bitcoin itself. Have you seen a lot of improvement in those areas over the past couple of years, Matt, where the markets have been cleaned up and it's easier to handle some things now?
Yeah, I think that's such a fabulous point. And we don't give the SEC enough credit. The first spot Bitcoin ETF was filed in 2013.
The Winklevoss boys.
The Winklevoss boys. And you all remember crypto back then. It really was a wild west, right? Mt. Gox was the largest custodian. Sort of thank God that a Bitcoin ETF didn't get approved way back then. The market wasn't ready for it.
Big time.
It's gotten way better. Custody has gotten so much better. You now have a large variety of qualified custodians that have been in the market for years, whether you're talking about Coinbase or even big names like Fidelity or nationally chartered banks like Anchorage. The trading has improved dramatically. And Bitwise wrote that report, you probably remember, of 95% of reported Bitcoin volume being false. Mm-hmm. And I know it's hard for people to imagine what it was like then, But you would go to coinmarketcap.com and you would see exchanges that literally no one had ever heard of. The number one exchange was something called Coinbene or Coinbean. I don't even know
Yeah.
how
And
to
there was
pronounce
like
Yeah.
L Bank and F token or whatever it was
it.
called.
Yeah, F
It was
coin.
totally
F coin.
wild. It was all fabricated. And that's
Yeah.
no longer true. You go to coinmarketcap.com and it's like, yep. These are the places trading takes place. So the market has improved really dramatically. And I think that's why I've always said a Bitcoin ETF is a matter of when, not if, because this market is moving up and to the right in terms of its quality. And it's just a question of when it gets over the SEC's line. And I think we're over it now. At least I hope
Yeah.
so.
Yeah, couldn't have said it better. Yeah, so my memory, I'm like going into flashback mode / having PTSD from all of those, crazy exchanges.
You're not trading on Bitforex?
Yeah. Oh my God. Yeah.
Exactly.
There's so many just, scam exchanges. And I think, even like if we, did have the Bitcoin ETF already, and then Celsius and Voyager and Genesis and all of these, BlockFi, they were involved, and that would have been chaos. It would have made this thing orders of magnitude, worse. And so the fact that we've now got, like Pizza Mind, like you said, we've got the space cleaned up a little bit, and on the right track. And, we've got the good actors, spreading and growing, like the Bitwise of the world, the Coinbases of the world. We kind of have the more gray area actors, i.e. Binance, shutting things down, basically moving their operations essentially offshore, with no
Yep.
US dollars on shore anymore, and closing down 1,000 positions and threatening more. So you have like the right trajectory. And like you said, it's just a matter of when, not if. And so I like where we're going. But my question also stems beyond just Bitcoin, right? A lot of the conversation's on Bitcoin right now. But I think the logical next step would be, okay, Bitcoin gets approved. Maybe that trades for a year, 2 years, gets comfortable with it. But then we could have Ethereum. We could have maybe even XRP. Not a huge fan. You could all have to get warmed up to it. But, Doge, all these other things that you could say, okay, well, we could apply that ruling. Maybe people are calling it the Torres doctrine now, with this new, SEC sort of discussion on these coins not being securities. Matt, do you think that we could have more ETFs eventually than just Bitcoin?
Oh, definitely. Absolutely. For one, if you look abroad, whether it's Canada has Bitcoin and Ethereum, Switzerland has, maybe a dozen different ETFs trading. I think we will get there in the US. I suspect that the next shoe to drop is an Ethereum futures ETF, right? There is a regulated Ethereum futures market. A few people have tried, and it hasn't looked like the SEC was ready. But there's no fundamental wall between a Bitcoin futures ETF, which is already trading, and an Ethereum futures ETF. And then once we get a spot Bitcoin ETF, I do think we cascade down. I bet we get ETH. I bet we get an index product.
Yep.
I bet we get more specific tokens. That'll all transpire, my guess, over the next 5 years. And it'll transpire at an accelerating rate. In other words, it took so long to get a spot Bitcoin ETF. It'll take less long to get an ETH ETF. And then the walls will come down and crypto will enter the traditional capital markets on a side-by-side basis. There will really be no major distinction.
Yeah.
With the XRP ruling and providing some clarity finally around altcoins and what is or isn't an investment contract with a token, does this change some of the available assets that you have to choose from to put into your index funds? Or are you still waiting for even more additional clarity on specific tokens that were named in the Coinbase lawsuit by the SEC, such as like a Matic or a Cardano?
Yeah, I will add, I'll without getting into specifics, I'll say that the decision on which, we have a rule in our index that we won't hold an asset that's at undue risk of being found in violation of federal securities law. That was a very specific saying, because that's a quote from our methodology. So with every index, we have to evaluate whether that asset is over or under the line. And we have a whole internal process. I'd say that the Coinbase and Binance lawsuits, as well as the XRP ruling, will enter into that mix, and we'll have a large a discussion at the index committee level about whether that changes our mix. It may not. these are complex analyses with many different factors. But you have seen, for instance, a few exchanges relist XRP as an example. And you've seen them maybe be more resolute in not delisting some of the assets the SEC named. So I do think these are important facts. They're just not the only facts that you have to consider.
Very cool.
Yeah.
And I want to kind of touch on I don't want to botch this. It was the BitQ Bitwise Crypto Industry Innovators Fund. Is that right?
Good job. Yeah, I know.
Yes,
it's a lot
I
of
got
words.
it. I tried to memorize this. So the Bitwise Crypto Industry Innovators Fund. Tell us about it, because I saw a headline that it crossed $100 million in assets under management.
Yeah, as mentioned, I come from an ETF background and created the first ETF analytics system. And one of the things that we really focused on when we were building that system was helping investors ensure that what a ETF says is what it holds. In other words, if it says it's a home builders ETF, let's make sure it holds home builders and not like Home Depot. If it says it's an oil
Home
ETF,
adjacent.
Exactly. So we like pure play thematic ETFs, as they're called. What BitQ is it's the first crypto ETF that launched that actually was able to use crypto in its name. And the SEC has a rule that in order to use a word in your name, you have to prove you have 80% or more exposure to that word.
Oh, wow.
And so that's like a cheat code for ETFs. So we think it's the best pure play crypto equity ETF in the space. It's had a tremendous 2023. I think it's up something like 200%. That's no guarantee that it will continue to go up, but that's just its return this year. It was down a lot the year before. The solution it provides is, particularly right now, people want exposure to crypto in the ETF format, and they can't get it through a spot Bitcoin ETF. But you can get it through crypto-linked equities, miners, Coinbase, etc. And so BitQ holds a portfolio of those companies, Bitcoin miners, trading firms like Galaxy, exchanges like Coinbase, etc. And historically, it's been like a levered exposure to Bitcoin. That's its pattern of return. So we love that fund. We're excited it's growing. A lot of advisors like it, and we think it has a nice future.
Yeah, no, I love that idea. If you kind of take a look at some of the charts, like MicroStrategy, for instance, which I imagine is in BitQ, is it?
Yep.
MicroStrategy's up like 130% this year, and like Bitcoin's up, 80%. And I see Riot and Marathon. I imagine they're in there. Yep. They're up, huge. And so, how can an average investor get exposure to something like BitQ? Or do you only do it really through, maybe you got to be a qualified, purchaser?
No. Yeah, great question. BitQ trades like any ETF. So you can buy it through a traditional brokerage account, whether that's Schwab or Robinhood or Fidelity.
Interactive brokers, maybe.
Interactive brokers. Yeah, of course, you should be aware of the risks and the risk of loss.
Always.
But every investor with access to a brokerage account can find BitQ at their fingertips, and it's it rebalances on a regular basis. It's managed by a professional team, so we're proud of that fund.
What products get the most interest that you guys have? Is there one that kind of stands out? This is the flagship. This is where there's the most interest.
Yeah, great question. There are two. BitQ is one of them. So BitQ is growing very fast because people want exposure to diversified crypto equities. And they find an efficient way to get exposure to the crypto ecosystem. The second one, of course, is our Bitwise 10 Large Cap Crypto Index, which people call the S&P 500 of crypto. And it's just an easy way to get diversified exposure to the crypto ecosystem. But we offer, I think, more than 20 products now. We offer ETFs, private funds, OTCQX trusts, SMAs. We have an active fund of funds. What we try to do is provide a variety of strategies and a variety of wrappers, but connected by expertise in the crypto space. So when you dig under the surface, we understand the tokens, we understand custody, we understand trading, and we present it to the world in all these different packages.
The crypto space has grown so much in just the past year. Calling it the crypto space almost sounds like an umbrella term that doesn't really define it anymore. We've got real world assets coming in, decentralized physical infrastructure, decentralized science, To say that AI, of course, has been like the hottest new niche this year that's really taken the whole world by storm. Of all these new things that are coming out in, the quote unquote digital asset space or Web3, what has you most excited for 2023 or 2024?
Oh, great question. 2023, I do think because of the momentum behind it, you're going to see a lot of excitement in Bitcoin itself. Um, we're really excited to see what emerges in the Ethereum ecosystem as the killer app. And my view is that we haven't seen the killer app there. We've seen huge infrastructure improvements with the rise of layer twos. We've seen interesting experiments, be it DeFi or stablecoins or big brands embracing NFTs or gaming. I think that's very exciting, or decentralized compute or decentralized graphical rendering. I think all of those are exciting, but we're still waiting to see what would break through. I do think we'll see something break through with real mainstream adoption within that time period that you looked. So, broadly speaking, I'm excited for the Ethereum ecosystem. And then I'm waiting to see what is the thing that really catches fire, right? What is the thing that is the next stablecoin or DeFi? And I think it's going to emerge, but I don't know what it is.
Yeah. I'm curious if there's going to be new, like basically, kind of harkening back to this XRP ruling, there's going to be some sort of new capital formation mechanism that kind of comes from these new guidelines or this kind of outline of what's legal, what's not. Whereas, we had the ICOs that boomed and bust. We had the DeFi mining, what is it called? Liquidity mining and yield farming that kind of had a boom and bust. It feels like airdrops are really in the clear. It seems like there's got to be some other distribution mechanisms for issuers of these tokens that really do kind of spur another big run up. I don't know. Do you have any thoughts on any new mechanisms that might come through this?
That's a really interesting question. I think a lot of people are working on that. I think a lot of the next generation of massive 0 to 100 leaders are going to be actual applications as opposed to infra tokens. And I'm excited to see how they structure those. If there's a corporation, if there's a token at all, I think those are interesting questions. But that's where I would look. I don't have any specific fundraising mechanism in mind, but I think that's one. And I'd add an old school one. There is a pipeline of companies waiting to go public in the crypto space that are fairly significant. And I think people have forgotten about that because they were crushed in the bear market. But, as excited as we were to see Coinbase go public, I suspect over the next 3 years, you'll see a new wave of companies going public in that space as well.
Interesting.
Yeah.
I want to take the conversation in a slightly different direction than what we've been on so far. There's been a lot of chat on Twitter from Bank of America customers that are having their accounts closed down, and it's presumably for interacting with Coinbase. And I don't use a bank, I use a credit union, and I've had no issues so far. But now that I'm looking at the domestic wire form that I'm about to fill out, brand new, it says, if you're planning on wiring this to a cryptocurrency exchange, we reserve the right to cancel this wire. And I went, oh my God, this is insane. So the
good thing you read the fine print.
Yeah.
How often do you do that, dude?
Dude, it's right there at the top. It's not even fine print. It's in bold. Like, they want you to know you are not allowed to do this anymore. So the banking sector has not caught on to the bullishness of crypto in the US yet. Are you hearing any rumblings or rumors in your neck of the woods that might finally change this so we can actually, get our money into this before it's too late?
Yeah. It's a great point to raise. And the short answer to that is no. I mean, I do think it drives to an important point, is that in part because prices have come back and in part because we have new narratives to glom onto, we've sort of forgotten the regulatory assault that was hitting crypto in Q1 that started in late Q4 that continued into Q2. Operation Choke Point 2.0, the shutdown of Silvergate and Signature. That's still very real. And you're pointing out another example of how that continues into this space. The short answer is no. I don't know that things are getting much worse, but I don't think they've crossed over and gotten much better yet. I think we're going to need to see possibly legislative action before that trend really reverses. It's still a difficult market environment. And of course, that raises risks. There are also these, accounting rules that are making it more difficult for traditional providers to enter the custody space. You see some of those traditional providers stepping back from that space like NASDAQ did. So there is still this negative regulatory overhang that hasn't gone away. It's still a headwind for us. We would be higher without it. It still raises risks, and you're pointing out an important thing to remember. It's there.
Before we wrap everything up, I want to get some insight into your fund of funds. I've heard rumblings about this. Has it launched? And if so, what is it?
Yeah, absolutely. We think there's room in the market for an actively managed fund of funds. I can't speak to our specific fund with much focus, but I think what's missing in the market, there are a lot of institutions that are interested in allocating to crypto hedge funds, but are uncomfortable doing the due diligence and don't even know the right questions necessarily to ask from a due diligence perspective. So we think there's room in the market for strategies that are highly due diligence, that have high risk controls around them, and that provide exposure to some of the interesting things that are happening in the crypto hedge fund space. The thing to remember about crypto is it's an entire asset class. And as a result, you're going to have investors take different approaches. People are going to do it themselves and buy individual crypto assets. They're going to buy crypto funds that are index funds. They're going to buy crypto funds that are actively managed, and they're going to allocate to hedge funds. They're also going to allocate to venture capital. All of those 5 paradigms are going to grow. The only 2 that are really big are retail investors and venture capital. Everything else in the middle is still in an emergent phase and is likely to get, in my view, 10 to 100 times bigger in the future. And so the hedge fund space is another space that I think could 10x or 100x. They're interesting alpha opportunities. And I'm an index guy, right? I manage the Journal of Indexes. I wrote about ETFs for a decade. But I look at the crypto space and I acknowledge that there are active opportunities there that well-structured funds can get after if they can control their risks. So we're looking in that space. We think it's interesting.
Incredible. I don't want to ask any secret sauce or anything, but I think maybe people who are listening are thinking, well, geez, if a hedge fund can do it, can I do it? Are there at-home strategies or anything like that people could kind of take a thought of? Like, for instance, one of the trades that I heard about was people just saying, hey, I'm just going to buy Grayscale Bitcoin Trust at a discount. And then the bet is, if it goes back to parity because it becomes an ETF, then you kind of get 2 for 1 Bitcoin. And again, the Grayscale Bitcoin ETF might go kaput. That might become an 80% discount and go to 0. So of course you have to manage your risk. But that's like one trade idea where there's clearly a huge, arbitrage opportunity.
Yeah.
Are there any other kind of ideas of like how people could actively manage trades or what they should look at or anything like that?
Yeah, I would, without getting to a specific recommendation, I would tell people that they have 2 major advantages and 1 major disadvantage. And so they should think about those. The disadvantage is that from a due diligence and risk perspective, it's very difficult as an individual. You can't visit a custodian and test their processes. You have to rely on others. So be aware of those risks. But you have 2 big advantages. One is that you're much smaller than a large institution. So there are a lot of interesting arb trades that work if you have $100,000 that don't work if you have $100 million. And that's like an unexplored opportunity that retail investors are uniquely capable of attacking if they're smart about it. And then the other thing is you have control over your duration, by which I mean, like the GBTC is an example. If you're going to hold that for a month, who knows what the premium or discount is going to do? But you might have conviction that if I can hold it for an unlimited time, it's going to convert to an ETF. And then your only risk is you're paying the management fee, or you could be wrong about that conversion. And so if you think about being small as an advantage and having control over when you need liquidity as an advantage, and then use that framework to evaluate different trading strategies.
I love it. Now, one of the things that that kind of notion of no expiration brings to mind is like, I think of a lot of these altcoins as unexpiring call options, where they're jumpy, they're super volatile. They might just grind lower, 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 but they're not, oh, you're expiring and getting rolled to, on the end of the quarter. They just don't expire. They're perpetual. And so you could hold them and get out on a quick move when everybody gets excited, and make sure, you're not buying during the periods of excitement. You're kind of buying during the periods of doom and gloom, which hopefully everybody who's listening has been doing at home on their own, buying during the bear market to prepare to reap the rewards of the bull market. But one other question for you. I know we mentioned diligence. Is there any, again, takeaway at home things that we can do to diligence the sea of 25,000 cryptocurrencies? And you don't need to speak to specifically how Bitwise is, but I know that you guys have a big process to select which coins are legit and which ones you should probably quit.
Yeah. When I think of diligence, what I try to avoid is things that unexpectedly go to zero. Sort of binary risk where it falls to zero. There's no way to do diligence if it's going to go up or down in value. I can't provide much guidance there. But there are a few tricks of the trade that could be helpful on avoiding real blowups. One is if you look at the best custodians in the world, the ones that are regulated, the Coinbases, the Geminis, the Fidelity, they publish lists of which assets they custody. And if you're looking at an asset that no major custodian custodies, that is a red flag of significant risk. The same thing is true if you look at where it trades. If it's only trading on unregulated exchanges, that doesn't mean it's not a valid asset, but it does mean there's additional risk, and you should be aware that there are those risks. This won't help you avoid every blow up. There certainly have been high profile crypto assets that you could custody anywhere that blew up, but they're good screening mechanisms to get you down to a still fairly large set of options, but not 25,000, right? The leading custodians maybe custody 100, 150 assets. And if it's not on those lists, that should be a red flag for you, or at least a yellow flag that you need to do an additional layer of research before you decide to invest.
Love it. That was, again, perfectly described, and definitely hit the nail on the head. And my last question for you before we let you go, you saw very clearly in the early 2000s what the future of ETFs would become. You kind of were writing the book on it. You were the CEO of ETF.com, and now your vision has really been fulfilled as the boomers' favorite method of investing, the mutual fund, has now been cannibalized by the ETF, which is now everywhere. So you were right on that, but you left that world to kind of start up in crypto. So what's the future of crypto? If we could take your learnings from ETF, is it going to be a similar trajectory where crypto is going to eat the world in some capacity, or going to eat ETFs even maybe?
Yeah. I wouldn't have moved from ETFs to crypto unless I thought it was a bigger opportunity. And I think it is a bigger opportunity. I think in the future, the vast majority of our financial activity will be transacted over public blockchains. The way we think about money will be intermediated by public blockchains. And a lot of our culture, anywhere where there's a valuable object to own, whether it's data or a good, will be through the lens of crypto and public blockchains as well. That is an enormous, many trillion-dollar market. And I think people who are early to that space may be rewarded because I do think it's going to disrupt a huge chunk of our economy and make it ultimately better. So that's why I made the switch. It's a bigger market than ETFs by a significant factor. And I'm really excited to see where we are in another 5 or 10 years.
Love it. Matt, thank you so much for coming on to the Crypto 101 podcast. I couldn't agree more. This was awesome. And if people want to actually get involved or learn more about the products, where could we send them real quick?
Yeah, sure. Come over to bitwiseinvestments.com. You can sign up for our various research and newsletters, or look at some of the product descriptions on that website.
Awesome. Thank you so much. And we'll talk to you soon. Hopefully you can come back on the show when there's another big announcement.
I love it. Great questions. Thanks, everyone. And thanks for listening. This was fun.
Take care.